Hello, and you're welcome to Global Business Insights, where from a global perspective, we discuss ideas and answers to questions in the fascinating places where finance, business, and culture meet. German automaker Volkswagen today reported a 42% drop in operating profit in the third quarter. Operating profit fell to 2.86 billion euros, that's about $3.1 billion, while third quarter sales revenue slipped 0.5% year on year. Banking giant UBS reports a large profit beat also this morning as it completes a first wave of client migrations following its integration of collapsed domestic rival Credit Suisse. Net profit came in at $1.43 billion, almost double forecasts. UK Chancellor is expected to raise the minimum wage by at least 5.8% in her budget later today, higher than the current rate of inflation at 1.7%, even as firms are warning this could mean they have to cut back on hiring. The message that needs selling is that there is still some short-term pain, but this will lead to economic benefits in the longer term. We will bring you highlights from the budget in the later episode. And in the US, job openings dropped to a 3.5-year low as openings fell to 7.44 million for September versus the revised low at 7.86 million in August. Today, we get a view of private payrolls data in the ADP employment report, and on Friday, the public sector non-farms payroll. Also later today, we get Eurozone GDP data and US core personal consumption expenditure index. That's the US Fed's inflation metric. Also, US third quarter GDP print is expected to show more growth than initially estimated. And on Friday, in Nigeria, October S&P PMI will be released, and it will also bring you what that data report unveils. Google parent Alphabet announced Q3 earnings after the bell on Tuesday, outperforming on the top and bottom lines, helped by its expanding cloud business. Earnings per share up 37% to $2.12, and we also saw a 15% rise in revenues to $88.27 billion. Alphabet stock climbed nearly 6% in after-hours trading. That was yesterday. Advanced Micro Devices reported Q3 results with earnings in line with forecasts and revenue ahead of expectations. The data center business doubled in sales for the second quarter in a row, but the forecast was slightly less. When you look at revenues, less than expected for the December quarter. Its shares fell in after hours. Big tech stocks powered the Nasdaq Composite to a record high as it advanced 0.78% to another record close. S&P added 0.16%, that's the S&P 500, and Dow Jones was down 0.36%. All eyes on Meta platforms, Microsoft reporting today, while Apple and Amazon report tomorrow. Jeff Bezos, the billionaire owner of the Washington Post, is also defending the decision not to endorse a candidate in the US presidential election as candidates make their closing statements. The European Union yesterday evening published in the EU's official journal an introduction of higher tariffs peaking at 45% on electric vehicles from China, ratcheting up trade tensions between the world's leading export markets. This comes despite concerns over Chinese retaliation and pleas from the auto industry to avert a trade war as China responds. The EU levies will range from about 8% to just over 35% on top of the existing 10% rate, depending on the manufacturer. Next month, we will know if added tariffs from the US will further complicate the global trade landscape. The fear that China is at the cusp of global auto dominance at the expense of American and European rivals means the momentum must somehow be slowed down. These higher levies will challenge China's market expansion, but can also motivate innovation to reduce costs further and add value to overcome some of these stiff barriers. Let's be clear, the cars market is tougher. Major European car makers, Mercedes-Benz and BMW, lobbied against the tariffs, fearing this could hurt their sales in China at an already difficult time. Earlier this week, Volkswagen said it was closing 3 factories in Germany. To make matters worse, the EV market has not caught on as was expected. Already, China has threatened to stop investing in states that backed the tariffs and to retaliate with penalties of its own on European goods, including dairy, pork, and brandy, as well as cars with large engines. Already, China launched an ongoing anti-dumping probe into European pork. That was in June. Europe is putting as much as $800 billion worth of bilateral merchandise trade at risk of an escalating tit-for-tat confrontation, and hoping China will just simply absorb this tariff increase is somewhat optimistic. My sense is that China is looking increasingly to BRICS, Africa, Middle East, and Asia for growth. And as the US and Europe steps up trade barriers, it could be opportunities for trade to blossom in other continental channels. The UK's long-term borrowing costs hit a post-election high yesterday as investors braced for Rachel Reeves' historic first budget. The UK faces a reported £40 billion funding gap and is expected to announce some tough decisions to stabilise public finances while protecting essential services. The Chancellor, Rachel Reeves, has already said they inherited a mess with very limited fiscal space for additional spending to fulfill a commitment to boost investment and upgrade key services. Analysts see 3 main areas telegraphed ahead of the statement release. First is the expected change in fiscal rules to increase headroom for future borrowing. Second is a package of tax increases likely to include the capital gains tax, inheritance tax, and taxes related to pensions, in addition to the already announced ending of VAT exemptions for private schools. Fuel duty may also be raised for the first time in over a decade, ending a freeze that was put in place since 2010. We could also see an increase in employers' national insurance contributions and also see an increase in taxes on e-cigarettes currently subject to VAT but not excise duty. The target for additional tax revenues could be anywhere from £20 billion to £40 billion. The government has committed to fiscal prudence and says it will avoid a return to austerity, which implies need for additional revenues via tax increases, though it has also committed not to raise income tax and corporation tax. The third main message expected is going to be around extra spending on investment projects to boost growth. Key spending areas also include education, housing, and NHS investments. Funding also likely to be earmarked for major house building projects, also increasing the defense budget. The plan to raise taxes will in the short term hit jobs, squeeze millions of middle income households, as well as affect the wealthier parts of the population and of course businesses. The IMF's latest forecast is for tepid growth of 1.5% next year, well below the 1.9% predicted by the Office for Budget Responsibility. That was in March. There are no quick fixes to improve growth and very limited fiscal space to invest in incentives to help business competitiveness. In short, Reeves has a tough balancing act later today, just after midday, when she announces this budget. The largest individual shareholder of Amazon, Jeff Bezos, may be in trouble. The billionaire owner of the Washington Post is defending the decision not to endorse a candidate in the US presidential election. The decision has rocked the Post, led to newsroom unrest, resignations from the editorial board, and loss of about 200,000 subscribers who cancelled their accounts with the paper. We gather an endorsement memo that had already been prepared had to be torn up as the boss, Jeff Bezos, said no. My view has always been that if media want to regain the trust that has somewhat eroded, they should not endorse candidates, which though is common practice. For Washington Post, some argue this would have been much less controversial if this were done, say, a year ago and not a week before a very divisive election. Also, as it may come across as lack of courage to stand up for what one believes. The new media environment has trained audiences to tune only to what they like. Audiences have more power and shifting to podcasts sponsored by people they identify with, which also can't be an ideal situation. Still, demanding for a boycott of Amazon Prime may be taking this too far, as many want a more consequential outcome than the exit of 200,000 subscribers. Amazon Q3 announcement comes in, that their results comes out tomorrow. Its shares closed up 1.3% in pre-market, even it was higher than that. Politics intersecting with business is often not a good idea. As many say, Elon Musk may also be about to discover. Or maybe it is. United States President Joe Biden has thanked President Bola Tinubu and the Nigerian government for dropping the criminal charges against the head of financial crimes compliance at Binance, Tigran Gambaryan. Gambaryan, a U.S. citizen, was arrested last February while on a business trip to Nigeria, charged alongside his company Binance with laundering about $35 million and tax evasion, which they denied. Asia Pacific markets traded mostly lower overnight despite key Wall Street benchmarks rising, with the Nasdaq closing at a record high as tech stocks gained. Benchmarks in mainland China and Hong Kong slipped more than 1%, leading losses in the region. And not to forget, later today, we will be bringing to you UK budget, read by Rachel Reeves, as the first Labour government budget, and some of the market implications and the reactions. Also, there's a lot of data, European data, and like we said, the US GDP Q3 data, as well as other releases, corporate announcements on Q3 performance. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Again, thank you so very much for watching. Bye-bye.